everybody, Buffy the Rate Slayer here, and we are back with the second episode of the September Weekly Market Insight Series coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. Financial markets continue to be in disarray. In this holiday-shortened week, the market remained fixated by Fed Chair Jerome Powell's resolute stance against inflation and continued to price in a 75 basis point rate hike at the Fed's next meeting. This week, U.S. equity futures and European stocks meandered in cautious trade, with investor attention focused on how aggressive the European Central Bank will be in the fight against inflation. Following a similar pathway, the European Central Bank, representing the 19-nation Eurozone, also intensified its battle against record inflation by hiking interest rates by a historic 0.75 of a percentage point and pledging several further increases, even as the outlook for economic growth darkens. So, what else is steering the market? While Bitcoin is dropping back into territory, signaling real trouble ahead, the largest cryptocurrency fell to trade around 18,500, its lowest level since June 19th. Crude oil is trading well below $90, which did help ease inflationary pressure, although there may be underpriced risks that could fuel a rally in broad raw materials amid the deepening concerns over Europe's energy crisis. Gold held gains after bouncing back above $1,700 an ounce as traders examined the latest Federal Reserve comments for the upcoming interest rate hikes. Meanwhile, supply disruption in the metals market continues to grow, with further aluminum supply cuts in Europe due to high energy prices. In his remarks at the Cato Institute's Monetary Policy Conference in Washington on Thursday, Fed Chair Powell said the U.S. Central Bank will not flinch a little in its efforts to curb inflation until the job is done. The Fed's Beige Book report released Wednesday said that the U.S. economic expansion prospects were weak, while adding that price growth showed signs of decelerating. 5 districts reported a bit of growth, and 5 others reported a slight to modest softening in activity. However, Fed Bank of Cleveland President Loretta Mester said that she would like to see several months of declines in month-over-month readings before concluding that prices have peaked. In another report, weekly jobless claims fell for the 4th week and to the lowest since late May, suggesting demand for workers remains healthy despite an uncertain economic outlook. Applications for U.S. unemployment insurance fell by 6,000 in the week ending September 3rd. The U.S. trade deficit came in largely as expected at $70.7 billion in July, a sharp reduction from the $79.6 deficit recorded in June. So now let's dive in to see what else is happening around us. NATO Secretary General Jens Stoltenberg said the war in Ukraine is entering a critical phase and warned of a tough winter ahead for members of the military alliance that could include energy cuts, disruptions, and perhaps even civil unrest. U.S. President Joe Biden held a call with allies, including leaders of the Group of 7 Nations, the NATO military alliance, and the European Union. The talks, which focused on the next steps to support Ukraine against Russia's invasion, came after Washington announced fresh military aid worth $675 million to Ukraine. China's export growth slowed more than expected in August, and imports stagnated, a vivid sign of a darkening global economic picture and weak domestic growth hit by COVID lockdowns and a property slump. Now, let me update you on how the housing market is, okay? So housing markets across the world are facing a critical test as monetary policy is tightening at the fastest pace in decades. The Mortgage Bankers Association, MBA, says the pace of mortgage applications slowed for a 4th consecutive time during the week ending September 2nd. MBA's seasonally adjusted market composite index decreased 0.8% heading into the long Labor Day weekend. The refinance index and the purchase index both dipped another 1%. Let me wrap it all up for you, okay? Investors weighed concerns that the Federal Reserve will remain aggressive in its fight to tame surging prices despite its potential repercussions on economic growth. Moreover, the August inflation data due September 13th could spur a major rethink among investors about the monetary policy outlook. The sanctions and the war, volatile commodities, are also adding swings to the market. It will be engrossing to see how policymakers undertake this complicated task of policy tightening to curb the inflation without grinding the economic recovery. So that's all we have for the week, guys. And it was a lot. So be prepared and join me again next week. As usual, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a happy Friday anyway, everyone. Have a great weekend too. Buffy out. Okay, let's see how that